For 4 days, this market did nothing but make records. By Friday's close, it had given a big chunk of them back. And the real story isn't the selling. It's what the selling was about. This was the week the AI trade cracked. And it was the week the Fed script flipped. Start with the scoreboard, because it tells you this was not a market-wide collapse. For the week, the Nasdaq lost 4.7%. The S&P 500 fell 2.6%. The Russell 2000 dropped 2.9%. And the Dow? Down just 0.3%. Basically flat, after touching a record high on Thursday. That gap is the whole story. When one index loses almost 5% in a week and another barely moves, the damage isn't everywhere. It's concentrated. And this week it landed on exactly the trade that's carried this market all year: artificial intelligence and the chips that power it. Rewind to Monday. All 3 major indexes opened June at fresh record highs. Nvidia jumped 6% on a new chip built for personal computers, and the names tied to it ran with it. Dell and HP up double digits. The S&P cleared 7,600 for the first time ever. The chip boom looked unstoppable. Then Wednesday night, Broadcom reported. The results were fine. But the company left its full-year AI chip forecast unchanged. It didn't raise the number. In a trade priced for everything to keep accelerating, fine wasn't enough. That was the pin. Thursday, the air started leaking out, but in a strange way. Chip stocks sold off and the Nasdaq slipped, yet the Dow jumped 875 points, up 1.73%, to a record close of 51,562. Money wasn't leaving the market. It was rotating, out of AI, into the names that have sat out the rally. United Health, JP Morgan, Walmart. For one day, it looked almost orderly. Friday ended the orderly part. The May jobs report landed, and it ran hot. 172,000 jobs added, roughly double what economists expected. Unemployment held at 4.3% for a third straight month, and prior months were revised up. On its face, that's good news. The market treated it as bad news, and here's the mechanism. A labor market this strong, with inflation still elevated, takes rate cuts off the table. Treasury yields spiked. The 10-year pushed above 4.5%, the 30-year above 5%. And the rate cut bets this market had leaned on all year flipped. Traders are now fully pricing a Fed rate hike by the end of the year. Not a cut. A hike. That repricing hit the most expensive, most rate-sensitive corner of the market hardest, the AI trade. The Nasdaq dropped 1,122 points, 4.2%, its worst day since the tariff shock of April last year, to close at 25,709. The S&P fell 201 points, 2.6%, to 7,384. The Dow gave back 695 points, 1.3%, to 50,867. Underneath, the chip damage was brutal. Marvel fell about 16%. Micron dropped roughly 13%. Intel and AMD each lost around 11%. Broadcom, the stock that lit the fuse, shed about 7%. Even Nvidia, the most valuable company in the market, fell 6%. So where does that leave us heading into next week? The Federal Reserve meets in less than 2 weeks, and it's Kevin Warsh's first meeting as chair. A market now pricing a hike, a president still publicly demanding cuts, and a brand new Fed chair walking into the middle of it. That's the setup worth watching, and it's the engine under everything that happened this week. One footnote worth adding before we go. Some economists think May's blowout jobs number was partly a one-off. Hiring pulled forward ahead of the World Cup, which kicks off in the US on June 11th. If they're right, the labor market may not be as hot as that headline, which muddies the case for hikes. And there's a quieter counter-signal underneath the strong print. Weekly jobless claims climbed to their highest level since February. The labor picture is messier than one number makes it look. Here's the thing to hold on to. The records this week were real. So was the reversal. What changed wasn't the economy. It was the story the market was telling itself about the Fed. For a year, that story was cuts are coming. This week, in 2 sessions, it became maybe hikes are. And when the story flips that fast, the most crowded trade is the one that pays for it. This week, that trade was AI. We cover the markets on the days that actually matter, with explainers when it helps. Hit subscribe so you don't miss it. We'll see you next time.